Ladies and gentlemen, Greg Michalowski from ForexLive.com. The price of gold surged in trading to a new all-time high of $2,146.79 before reversing lower. We are now down on the day, down by $43. That's minus 2.11% at $2,028.20. The low price reached $2,020.26. So about a $26 range in trading here today. What are the technicals saying now? Did the sell-off turn the bias more to the downside, or the buyers still in play? I'm going to take a look at the technicals that are driving gold in this video, so let's get started. I'm going to start off by taking a look at the hourly chart of this commodity, I should say. And what we saw on Friday was that the low prices through here, they stalled where? Right against the 100-hour moving average. And you go back to these days right here, it also stalled against the 100. Right here, it stalled against the 100. Here, it fell a little bit below, but found support buyers against the head of the 200-hour moving averages, and then reestablished support against the 100. So all these little arrows right here stalled against the 100-hour moving average price, moved to the upside. That move to the upside was helped by a break of this topside trend line through here. We got close to it here, and here before moving to the upside and racing up to the $2,146.79 level right here before starting its reversal to the downside. We did see some stall against the underside of this broken trend line before breaking lower and lower and lower, getting below the 100-hour moving average. Initially moved below the level and then bounced back above it before rotating to the downside, and then went and tested the 200-hour moving average. That's a green line in this chart here. We hadn't been below the 200-hour moving average since going back to these days right through here, somewhere around mid-month of November. November was the last time the price fell below the 200-hour moving average. Now, there has been a stall against that 200-hour moving average. You can see over the last 4 or 5 hours, the price has been traded above and below that level. And we are trying to move a little bit away from it currently at the moment, trading at 2028. So that is there is a reason to believe that buyers are trying to hold the 200-hour moving average here. What would help on the upside would be a move back above the 50% midpoint of the move up from this low right here, the mid-November low, maybe November 13th to the high price that we saw earlier today. So getting above that 50% at 2037.37 would be more bullish, as would a move back above the 100-hour moving average here, and maybe even this swing area right through here where we had a number of different swing highs, stall the rallies through here before breaking to the upside. So this area between 52 or 2047 and 2052. With the 100-hour moving average of 120.4810 are topside targets to get to and through to increase the bullish bias. Before that, the 50% retracement at 2037.37 would need to be broken. So right here and up here would increase the bullish bias absent that. And there's a battle going on between the 100 and 200-hour moving averages. A move below the 200-hour moving average would be needed to increase the bearish bias, and when that is done, then maybe looking toward this swing area between 2007 to 2018 would be the next step bias to get through. Also in that area is the 61.8% retracement at 2011. So that's what the hourly chart is saying. It's saying finding some support against the 200-hour moving average, get back above the 50%, and this 100-hour moving average is needed to increase the bullish bias. Now, let's take a look at the daily chart. And look at the low price today to see why the price also may have found some support. And if we look at that, you see this 38.2% retracement line. That's of the move up from this low right here. This is the, looks like the October low to the high right here. In the other chart, we were looking at the November low right through here. And so this longer term trend move to the upside, the 38.2% retracement of that move comes in at the 2018 level, and the low price in trading here today reached down to 2020 before finding support buyers. So not only do we have the 200-hour moving average down there trying to hold support, we also have the 38.2% retracement. So what that says is getting below 2020, getting below 2018 are the downside targets that would need to be broken in order to increase the bearish bias here in the price of gold. Other than that, the buyers have lost some of their mojo. Why? Because we fell back below these old previous highs through here that or all-time highs as well. So getting back below we are back below those levels at 2047, 2081. We're going to need to get back above those levels, but the dip buyers have an opportunity to lean against support down to 2018, and we'll see if that level can hold support going forward and push the price back higher, or do we break below that level and increase the bearish bias and announce that this is the high for 2023. We will all say, my name is Greg Michalowski. Good fortune through trading. Bye-bye now.